Hello everybody. This is lecture number 2 of entrepreneurship and marketing. Okay. Before starting this lecture, I will again and again advise you, please read your textbooks, the related portions. If you look at only this slide portions, PowerPoints, it is only the summaries. Okay. So substantial information is still in the textbooks. Okay, now I start. Okay, today is the first starting S Corporation. S Corporation is owned by not more than 100 shareholders of one class of stock. Okay, this is unique forms of the American corporate systems. But S Corporation can issue shares of the stock with different voting rights. Okay, that is one of the features. And formation, corporate formation, that is ease of formation, must file timely election with the IRS, Inland Revenue Service, with 2.5 months of first taxable year. Okay, and cost of formation is high because this is a complicated form. You have to use your professional legal advisor, and owner's liability is limited, same as C Corporation. Tax is a single tax, maximum 39.6%, proportional share at individual rates. Okay. There is no corporate income tax, so no double taxations. And transfer of ownership is transferable, but transfer may affect status. Okay. And continuity is also perpetual, same as C Corporation. And another thing is the liquidity of owner's investment is high. Okay. Some form of the corporation is very difficult, this kind of things. But raising the capital is also high. Okay, that is the characteristics of the fifth type of the corporation, S Corporation. Now, last form is limited liability company, LLC. This is normally owned by one person. A few of the American states require 2 or more, and a form of ownership is a cross, which means somewhat between a partnership corporation and a S Corporation. Okay, but not subject to the restrictions imposed on S Corporation. Therefore, they are avoiding the restrictions on S Corporation and partnerships. So rather complicated form. So ease of formation is a 5 articles of organization with the Secretary of State, each American state. Okay, cost of formation is high. Because of the complications, you need a professional help of the legal assistance. And owner's liability is limited because of the limited liabilities. Tax is also no corporate tax, single taxation, 39.6% maximum. Okay, proportional shares at individual rates. Transfer of ownership usually requires consent of all members. Okay, so therefore you have to be very careful, depending on the states or some agreement among your partners. This transfer of ownership is different, and continuity is also perpetual. Okay, not limited by your lifetime. And liquidity of owner's investment is high, relatively easy. Okay, raising the capital is also easy. Okay, almost same as the C corporations. Okay, that is a typical form, the limited liability companies. Okay, now going to some other topics right now. We discussed so far the issues when you start a new business from the very scratch, which means you are forming your own organizations. But now we have to discuss another two forms of the starting the business. The other one is rather you start new business, you can buy existing business. Of course, there are advantages and disadvantages. Okay, buying, and also you can sell. Sometimes already we have established your organizations, and then maybe you are fed up with your business. I'd like to rather start the new businesses, just like children are fed up with their old toys. Well, then you can sell your your organizations making some profit, so therefore you can sell in a good price, and then by using this price, then you can buy existing new businesses or starting from the scratch. All right, and also they are somewhat between starting the scratch and buying the existing business. There are some form of the between the two systems is a franchising. So today we'll mainly discuss about buying an existing business. Okay. Now, types of the buyers modified from figure 6.2 textbooks. Okay, chapter 6. Okay, we start from mainstream of buyers. This is the small buyers. You are small buyers. Okay, maybe you are targeting, say, revenues with $1 million per year sales amount companies we need. Okay, risks are relatively small. Something you want to buy for, say, in Karachi, some biryani restaurants, well, much cheaper than $1 million maybe. Right? Examples is a car wash station, or dry cleaners, or maybe dry cleaners, or laundry service. In GIK campus there exists. If you are interested to own and operate of this laundry service company, well, you can buy, or some small cafes. Okay, so this is normally small enterprise starting points, one form. And second form is a corporate refugees, built on his or her own ownership. All right, corporate refugees is a very funny expression, but anyway, you worked for some other companies a pretty long time, maybe 5 years, sometimes 10 years, 20 years, or until your retirement, and really you are fed up with your work, which is as an employee to someone else. But rather you want to own your own business and then starting, and you have already achieved or learned some expertise in certain business. Well, revenues may be less than $5 million. Okay, relatively larger than the small mainstream buyers. The risk is a little higher than the small buyings, so low to medium. Well, examples is something together with your friends, you start consulting firms, or some of the advertising companies. You already worked as some advertising companies and then accumulated your expertise 10 years, 15 years, and then you can start advertising companies. Or you have already skilled expertise in HRM, for human resource management. Well, you can start some HRM consulting firms. or some small manufacturing companies. This is a corporate refugees type. You are not quite amateur. You have already have certain skill and expertise. Okay. Then number 3 type, serial entrepreneurs. This is relates to the expansion of business. You have already certain organizations, but you want to rather expand your business. For example, if you have 2-3 biryani restaurants and now wants to expand it, more biryani shops. Okay. Well, revenues may be less than $10 million expecting, so risk is medium to high. Examples are, if you are already good expertise in the computer software repairings or something, then you can buy other computer service stations, or if you have some small rental car companies and you want to expand it. I have already have in Karachi some rental car service company, and then you want to have another rental farm company in Lahore or Islamabad. Okay, you can buy. So this is the serial entrepreneurs. So number 3 type. Now, this is the final version is a financial buyers. These are the, maybe you are looking at the newspapers, business magazines, merger and acquisitions. You are already working some big companies, legal departments or financial departments. Okay, and then your company has already about, say, more than 10 million, 20 million revenues, and then about $100 million or much more than that, and you want to expand your business certain areas. Well, we don't have any corporate stations or business in India or China, and you are already working in Pakistan or America, and you rather wants to buy existing companies rather than starting from the very scratch. Well, risk is rather high. Sometimes through you have to use venture capitals or angels or normal bankers loans. Well, examples is healthcare, medical industries, or energy industries. Well, I have to discuss more in detail about this kind of system. Is to buy or big companies, merger and acquisition, sometimes need much more sophisticated analysis or difficult things. You have to mobilize professional lawyers, accountants, and consultants, and expensive. There are professional merger and acquisition consultants. Normally they will charge you 1% to 2% of the acquisition money. Well, about, say, $100 million, $1 billion acquiring the companies, then, well, $100 million acquisitions fee. Well, then they may require about consulting fees about, say, $2 million something. Okay, this is the things it happens, merger and acquisitions. Well, now this is the end of the today's discussion. So I will further discuss on series number 3 also. Okay, thank you very much.